Biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name is Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap here on Friday, April 28th, 2023. I am not joined by Bruce today. I am joined by my other wonderful co-host, Jordan Youl with StoneCastle Investment Management. Thank you for joining me, Jordan.
Yeah, it's great to be here. Thanks for having me.
I always like seeing your face, and I'm going to be in Kelowna next week, so I get to see you in 3D, which is always so exciting.
Looking forward to it.
Yeah, me too. Okay, let's dive into it. There's a bunch going on in the market. We're going to do kind of a general market overview. There was some stuff that happened this week. You're going to tell us all about it. We're going to talk about the PCE and FOMC. We will tell you what those stand for and what happened with them. We're going to talk cannabis. We haven't talked cannabis in a little while. There was some movement in the cannabis sector on the other side of the border. We're going to talk about that. And then, of course, we're going to get into some CSE issuer news. So, first of all, market overview. What happened?
Yeah, obviously, the last couple of months, there's been a lot of chop and some big rotation as we've discussed in previous market recaps. We came into 2023 with a really strong January, predominantly led by the small caps. But we saw a big rotation out of the small mid caps back into the large caps and the mega caps. And, there's a lot of chop and there's different sectors that are really thriving and doing well in this environment. But there's also other areas that continue to lag and struggle, which I'll touch on in a little bit more detail. But what's really important is, as investors, when we look at our time frames, is kind of just taking a step out, instead of looking at the day-to-day, week-to-week chop. And what's really fascinating and interesting is, despite all the negativity and pessimism out there in the markets with fear of recession and inflation and rates and what have you, there are areas that continue to make new highs. And what's really interesting from a top-down perspective, if we take a look at the Vanguard all equity ETF portfolio, it's a very good proxy to gauge, what equities are doing in terms of an asset class. And it actually just broke out, made a new high this week, hitting a 52-week high. And this is a very strong representation of the equity markets in that it tracks the entire US equity market, but it also tracks Canada, mid-cap, large-cap, developed regions outside of North America, as well as emerging markets. So what I did was I annotated this chart with those 4 different ETFs that represent this benchmark with the percentages and the makeup of this benchmark. And it's really kind of going against the grain in that, a lot of investors still remain fearful. There's a tremendous amount of cash still on the sidelines. But there are different equity markets like the UK and France and Mexico, like hitting new 52-week highs right now. So we are seeing opportunities outside of the US. And I think it creates an opportunity set for investors to look back here at Canada at home because, Canada has really underperformed and lagged the US for the better part of the last decade or so. And we really believe we continue to see a shift or a changing of the guard that can favor Canada and these foreign equity markets in the years ahead.
So it feels like this is all positive news, wouldn't you say?
It is, yeah. Like if you own this outright and invest from a passive perspective, if you just buy units of this ETF, you're hitting 52-week highs, you're happy as an investor. But as I'll show you on the next chart, not everything is working, right? So this is a really good example of the rotation, as I explained at the top of the call here, showing the rotation and the internal leadership that is driving these markets higher. And I'll explain this further, but effectively in the upper panel is a ratio when we're comparing the Vanguard mega caps, so the FANG stocks, the biggest companies that represent the S&P 500, and we're comparing them to the S&P 500. And you can see that line in the upper panel of the chart is positive. It's made a big move or a relative outperformance off of the March low. So we continue to see the mega caps, the tech names really leading the markets and propping it higher. And in the second panel, we have the Russell 2000, which represents the smaller caps. And you can see at the start of the year, that ratio was above the 0 line. As I mentioned, we had a really strong January, but we started to see a rotation out of those small mid-cap growthier areas of the market into the larger caps in March. So, market breadth is not very constructive and positive. So as a stock picker, as an investor, there are opportunities every single day to pull out return in this challenging market environment. But as I mentioned, not everything is firing on all cylinders right now, despite, that, big representation in that Vanguard Global Equity ETF hitting new 52-week highs.
It sounds like perhaps there's usually when you see that kind of movement, investors are moving to perhaps what they feel is maybe a safer place to put their investment dollars.
Yeah, that's absolutely correct. And, if you look at other charts we've referenced in previous recap shows, we look at contrast from one extreme to the other. So risk on versus risk off. And one of our, primary market technical indicators remains negative. It's improving. We're on the cusp of getting that next risk on signal, but it hasn't been triggered yet. And effectively, that signal has been negative since January of 2022.
Gotcha. Okay, let's talk about the PCE and the FOMC. So the PCE is the Personal Consumption Expenditures Price Index. It's essentially what we pay for goods and services. And I think most of the data this is a U.S. Data point, right? And the FOMC is the Federal Open Market Committee. This is a committee made up of 12 people. It's a branch of the Federal Reserve System, and it determines the direction of monetary policy. So what did we learn this week?
Yeah, so, really all eyes were on this PCE number that came out this morning. And, headline inflation has come off its peak. The rolling year over year rate of change is really what we want to focus on was, 4.2, and previously it was 5.1. And you can see, as I've shown here on the chart on the right-hand side, that teal color, that light blue is heading south effectively. Now, we're still above that target rate of 2%, but the direction, that rate of change is definitely positive. Now, what's sticky is the core inflationary data, and that is the data that excludes energy and food, right? So we still are dealing with, increase in food prices, higher prices at the gas pump. And that remains, kind of sideways. Every single month it's going to chop around a little bit, but the rolling 12-month change dipped slightly, which is positive, but, it's gone from 4.7 to 4.6. So that's something that we obviously want to keep our eye on. But the market is anticipating this. So in the next slide, in terms of the FOMC, and I pushed this out for the June meeting because next week is really what we're going to be focusing on Wednesday is the FOMC. But the market's already digesting and expecting that the Fed to hike 25 basis points on Wednesday. That is not new information. The market's already discounting that and expecting that. But if we look out into the June meeting, it's also indicating the fact that there's a high probability that the Fed is not going to hike for their June meeting. So the takeaway here is that we've just gone through a year or 2 years of excessive rate hikes. But the takeaway here, as I mentioned, is that we're probably on the late stages of this tightening cycle where the market could expect that the Fed will, if they do hike in June, will only be 25 basis points, but there's a high probability that they're going to hold. And this is the pivot and the pause that the market is really waiting for and expecting.
So we're still going up, but at least it's in smaller increments, and hopefully the tipping point will happen where we can start going the other way. Okay, let's talk about cannabis. We haven't talked about cannabis in a while. Cannabis has had, a bit of a rough go in the markets, I'd say, over the past, how long would you say has it been? About 12 to 18 months?
Yeah, I'd say 18 months or so, yeah. It has its bright spots and its moments, but the concern with the cannabis, it's so focused on like catalysts, right? Yeah. Because it's such a growth area of the market. And, the moves can be powerful, but in both directions, right? Yeah. So, based on the sentiment last year with fixed income breaking down, equity markets breaking down, being in a risk-off market environment, the cannabis sector was really under-owned, out of favor, and kind of ignored to a degree, even though valuations, especially in the multi-state operators, were quite reasonable and attractive, but there was just really no appetite in the cannabis sector because of the environment we're in last year. And that's really kind of built into this year as well, right? But, obviously with the SAFE Act, this week, and that headline obviously, generated a lot of attention as well. So in our sector analysis work that we do, cannabis was one of the top performing industry groups and sectors this week.
I bet it was. So the Safe Banking Act, just to remind people, it allows cannabis businesses to operate legally without fear of punishment by federal regulators. And just to remind our viewers, it is still federally illegal cannabis consumption in the US. And so we see legalized states, and those are legalized, but in the US, banks are federally regulated by the federal government. So this would allow companies in the US that are making a huge amount of income and revenue to be properly able to use banks, which they can't really properly do at this point. So there's a lot of money that's flowing around the US without proper channels. And that's hard on those poor cannabis issuers. It's hard to run these multi-million-dollar companies and not be able to have that. So it came back to the Senate this week, right?
Yeah, absolutely. So it was like a bipartisan bill that was tabled by the House and the Senate, right? So there's more bipartisan support, right? It's come to this stage like seven times previously, and it's kind of run out of gas. But the language in the bill has changed a little bit. But nevertheless, it's top of mind. And, again, this could be a massive catalyst for these companies and the issuers in terms of financings, investment, and also safety, right? Because, they're solely dealing with cash on hand, right?
Absolutely. And, you bring this up that it has come to the Senate 7 times now. And I think the market reacts. You talked earlier about these catalysts that really will move the market. So the market gets excited, is coming back to the Senate, and then the market gets less excited when it doesn't pass through, but it keeps trying. Now, this doesn't change that it still would be federally illegal. It just allows cannabis companies to utilize the banking system. So hopefully we see some movement there.
Well,
Okay,
I think the
sorry.
takeaway here is, just to interject a little bit, the takeaway here is we just want to see some follow through. Right. So we've had a good week. We just want to see some follow through. And obviously, cannabis investors are going to really pay attention to, this upcoming vote to see, how everything responds and reacts.
Absolutely. Yeah. Well, I wish them all the best. I hope it works out for them. Okay, we're going to get into CSE issuer news. My favorite part of the show. We are talking today about Tenet Fintech Group. They had announced a financing. And it's a debenture financing, and they just came out and they amended certain terms of their financing. What I thought was interesting about this is now the financing is of the unsecured debt for proceeds of minimum of $5 million and a maximum of $25 million. This is a pretty financing. So just to remind our viewers, debentures is you become a debt holder in the company as opposed to a shareholder. Debentures typically do have a conversion element to them. But this is a decent financing. So Tenet uses the power of AI and analytics and online networking to connect small businesses around the world and create one giant local economy. I love this story because it's great, big, juicy financing. So good for them. But also, we haven't talked about AI in quite some time, I feel like. So what are your thoughts, Jordan, on the AI sector? Are we going to see more of this stuff?
Oh, without question. Yeah, we already see a tremendous amount of deal flow across the desk in this area. It's been a hot topic. You're seeing it online in social media, Twitter and whatnot. But yeah, it's a growing segment that creates opportunities for businesses to streamline and grow. And as an investor, there's going to be opportunities to participate in these types of financings to get in relatively early in these early stage growth companies for sure.
Do you think Chat GPT is maybe going to give a nice little bump to anything AI?
I think so. Like, I don't know all like the ins and outs per se with this chat, as you mentioned, but obviously it's something that is innovative for sure, right? So it's going to create some opportunities as investors to generate some returns.
Yeah, usually something like that, it really can help propel a sector. So good on Tenet. Wish you all the best. I think that financing is going through Research Capital solely. So congratulations. Okay, Jordan, what do we think about going into next week other than getting to see me?
Yeah, I'm definitely looking forward to that. It's month end right now. I can't believe we're going into May. But we have a lot of earnings next week in Canada and south of the border. So we're going to watch that. On Wednesday, we have the FOMC, I think, which is really paramount and important. I think a lot of investors are going to, really be quiet on Monday and Tuesday and just really wait for that FOMC release on Wednesday. And then I think what's really important is the US unemployment rate on Friday, because if we start to see an uptick in unemployment and we start to see trends emerge with higher unemployment, that doesn't necessarily bode well for the economy, right? And recession is top of mind for investors. We've seen some areas of weakness or cracks in the economy. The ISM numbers are coming out next week as well. So there's a lot of economic data. But yeah, I think the unemployment rate is definitely critical, because if history is any indication, anytime we see an uptick in unemployment, we tend to see, cracks in the economy, which could translate into more volatility in the markets as well. So that's just something that we want to pay attention to.
Sounds good. Well, listen, I think we're going to try and make it work that we do an in-person market recap next week. So make sure you stay tuned. Maybe I do this with both you and Bruce next week,
Sure.
and we'll get everyone's thoughts on what's going on.
That'd
So
be
stay
great.
tuned for next week. I also want to mention that we have just launched, the CSE will be hosting in your wonderful town of Kelowna, the Summit for Responsible Investment. It will be at the Innovation Center on June 27th. Send us a note if you're interested in finding out more, but we'll definitely make sure that details are on our website ASAP. Also, it's Earth Day, I think, this weekend. So am I right? Oh, no, it was last weekend. It was Earth Day last weekend. So happy Earth Day, or belated Earth Day. Listen, Jordan, it's always great to chat with you, and I look forward to seeing you next week.
Yeah, thanks. Looking forward to it.